Okay, let's see if I can record this video. Planning for the week to be. This is going to be week ending August 7th, 2026. And this is going to be an NFP week because Saturdays are for reviewing the week that was and Sundays are for planning the week to be. So this is a really special week for a couple different reasons. NFP weeks are always rife with manipulation opportunity, and this particular week falls during what I would consider a potential quarterly swing point. Why is next week a quarterly swing point? Well, if you think about the daily candle and you divide the daily candle up, which has 24 hours, into periods where you're more likely to have accumulation, like at the very beginning of the opening of the daily candle, and then more likely when you're more likely to have manipulation into distribution for a classic trend candle, then you would consider a good opportunity to have peak manipulation to be London daybreak, for example, if it's a Forex pair. A lot of different, any ICT trader is going to know that London daybreak or the London NYAM crossover, like the pre-NYAM, like the so-called 7 a.m. kill zone, or perhaps it's the 9:30 NYSE open, or maybe even it's the 10 a.m. options expiry that late in the progression of the daily candle. Quarterly candles work the same way. So this quarterly candle, which is Q3 2026, the candle officially opened on July 1st, 2026. But if you think about it, the true open of the candle likely occurred sometime in July, and you're not going to really see the peak accumulation into manipulation into distribution, or the accumulation into the peak manipulation, as I more often say, until, let's say, what is the London daybreak of the quarterly candle? Well, the equivalent of the London daybreak for the quarterly candle, if you take the, if you're using, let's say, a popular fib retracement of 38.2% of the way through the candle, well, that gets us to, I don't know what it was, 34 point something days, which is actually Monday, August 3rd for this particular quarterly candle. NFPs happen on Friday, August 7th. That's going to be probably one of the more important macroeconomic data releases. So you would expect the NFP to either herald the peak manipulation, be the peak manipulation candle itself, like in other words, create the news wick, or form a range, which is then turtle souped to be the peak manipulation. So there's three kind of options. Just as far as like carryover from this week to last week, we still are bullish on the pound, the GBP USD cross, because the GBP USD has had a 2-day model that has taken a 20-day setup and still needs 3 out of the 6 days to distribute. So in other words, it started distributing Wednesday of the Fed meeting. And so here's the chart for GBP USD with the original 20-day setup and into the distribution. So the 20-day setup was from roughly, it was from early July. If you consider these as like 2-day candles rather than what I'm presenting them to you now, I think these are 8-hour candles. The 20-day setup was from early July all the way until Fed Day, which was the 29th, which was Wednesday of last week. And so if you consider Wednesday of last week as the first day of distribution in a 6-day distribution phase, that means that it goes Wednesday, Thursday, Friday, and then it goes Monday, Tuesday, Wednesday of this week. So in other words, August 3rd, 4th, and 6th are going to be a projected continuation for this distribution. The reason why I have this fib drawn the way it is I'm actually targeting a breaker entry now into the 618 retracement of the trend that's already been established. Why am I targeting that? Well, a couple reasons. There's the 8-hour breaker, as you can see. There's 2 8-hour fair value gaps. I believe there's even 2 daily fair value gaps if you go on the daily chart. This is also the mid volume. The mid order book volume is 1.3385, and that corresponds or has a confluence with the 0.168 of our overall 20-day range here. So that's 1.3382, which is a whole whopping 3 pips difference. It's still within the upper part of the 8-hour order block, as you can see. Same thing with these resource currencies here, Asian, SEA resource currencies, Aussie and the Kiwi. I don't really have planned retracements for them, but I'm assuming if you have a breaker entry off of the pound, then you'll have similar opportunities in Aussie and Kiwi. I have noted where Aussie and Kiwi are likely to swing into in the coming few days. And I actually think that this is kind of an opportunity for an SMT to occur. There's already an SMT that's formed, if you pay attention. So the June 12th peak in Aussie has yet to be eclipsed, and I think that could be a stall point, whereas Kiwi is actually traded above, closed above last week in the wake of the Fed meeting. Then finally in crypto, I'm expecting to, so let's say early on in the week, if currencies are manipulated lower into the breaker, so in other words, if the pound does hit the mid volume and gives us a long breaker entry, I think that crypto early on in the week is going to be conversely long, while the currencies are, while foreign currencies are bearish. Crypto is going to be bullish, but it's going to be kind of a manipulation into distribution model where the pause CRT that's being targeted from Friday's dump. So in other words, Friday's dump is going to cause a pause CRT to happen, including this weekend, because crypto trades over the weekend. And I'm expecting Bitcoin particularly to trade up into 64,000, roughly 64,000 even, like maybe just above 64,000. You've got your so-called bright line order book level here from the heat map around 64,000. You've got a, I believe these are 8-hour candles. You've got a 8-hour candle high that completely covers this fair value gap and then stabs up into this fair value gap. So 64,250 or so would be where I would start to look for entry models to get bearish again in crypto. One of the more refined approaches I've been taking to a, and this is kind of a paradox, but if you have a this idea of initial ranges that are overextended and rapid and violent, and I used last week I identified a trade that was caused by an overextended bearish move in crypto. It was Monday of the week, and it was the Kospi. It was triggered by, well, you could assume would be the Kospi, the Korean index tanking. That caused a bullish pause CRT, which took literally all week through the Fed meeting and everything. And then it was Friday. Friday, it took the pause CRT terminated on Friday, not really being a CRT of the entire candle, but hitting some sort of OTE or some sort of internal PD array within the initial range, and then the pause CRT led to us to a turtle soup with a lower time frame entry model, and then that's just a way. So the overall theory behind trading these is you want to make sure that you understand the chain of trades before the trade that you're in. So in other words, if every exit is an entry and every entry is an exit, then you want to go back a few entries and exits from where you're planning on getting in to fully understand the framing of your trade. So that's it, and good luck trading next week. Thank you for listening to my